Good morning. It is September 19th, 2023, and we're going to give you two distinct things today. One's a little bit fun from our arrows, and the other one we mentioned a few days ago. So let's head over to the Longbow dashboard and talk about them. So while you wait for the Fed to come out with their new dot plot and all the Q&A from Powell, we've got Meta and we've got utilities. So in terms of Meta, you've heard about the year of efficiency. Well, I think they're moving on. We talked about it. Bernstein had a fun note out, after 2 straight quarters of beating on the top and bottom line, divisions are getting branded t-shirts again, rehiring people, restaurants are reopening, dinner times moved back up to 6 o'clock, which means you don't have to stick around too late to get your dinner meal. Laundry services, haircuts are back. Thursday happy hours are on tap. So they're trying to lure people back. That means that they got the money to spend. So that year of efficiency is moving on to, hopefully for investors, a year of growth. So let's take a look at where we're at with Meta. We're in the middle of the trading range. So you're really in a neutral here, odds 1.5 to 1. You've got that neutral short term because obviously tech's had a harder time, but then medium bullish momentum signal. So if you're looking at it, obviously, if you've been owning it this year, it's been up, and away. You had the August doldrums, but it's bouncing back a little bit here. But this is what's causing the neutral on the short term along with tech. But we're just giving you some fun signals. It just means that, if you are an investor, versus waiting for, 10 Qs, 10Ks, 8Ks, you can see actions happening. It means that instead of just focusing on profits, during a year like this, they're trying to focus on growth, maintaining employees, and making everybody happy. So that's your fun fact today. But utilities, our friends at the Lead Lag Report put out a really good chart, and we also flagged this for you in the last week, is there's been a really big move. And so the past 2 weeks have been the most powerful move in 2023 for one of the worst performing sectors of the S&P. So one question would be, is this just an oversold bounce? Is this a trend? Because, when we haven't seen the treasuries really confirm this kind of move, but when you get, more of a trend in an XLU going up, typically that means heightened volatility, heightened risk. We think it's just a little bit more about people being concerned with some of the gas moving up, inflation, people being cautious from what the Fed might say. So we'll be watching and flagging this for you. It's in the middle of the range. There's nothing to do here, but you can see it on the Longbow dashboard because you can see that bullish short-term momentum, even though it's been bearish for the medium term. And, you've got a premium of 10%. Yeah, it's flagging green, but that's 10%. It's really the lowest of our flags. So when we get to the XLU, you've kind of been in no man's land. You've been not good in 2023 here. So it's been a downward, but you have, look at this is where you're getting this bullish move. So you hit the oversold. You can see it hit the top end of the trading range. It's moved down a little bit. It's not something you say, oh my gosh, you need to buy into this unless you, have a view, which you might, on rates. Bernstein also came out and said this is the time for treasuries, which means if yields are going down, typically long duration assets like utilities will do well. So you could make that type of connection from utilities to treasuries. But we see this a little bit more just in the bounce of the trading range. And you can see that, number one, from the short-term signals here, and 2, for the chart that I just showed you. So it's natural that you're going to see things bouncing off the lower end of the trading range. So we'll keep you informed if this bounce becomes more of a trend. But we did want to flag that for you because we brought it up in the last week, and we are watching it for you. That's it for today, and we'll catch you back tomorrow.